Sir, let us start our session.
Yeah.
Yes, sir. Namaskar, everyone. Am I audible?
Yeah.
Namaskar, everyone. On behalf of Nasin Vadodara, I warmly welcome you all to this distinguished session. Today, it is my privilege and delight to invite Sri Ashwini Pani, an esteemed expert in indirect taxation and renowned guest faculty of Nasin, to deliver an insightful lecture on the recommendations emerging from the 56th GST Council meeting. Sri Ashwini Pani is a highly accomplished indirect tax professional with over 15 years of dedicated experience in GST compliance, audit, due diligence, and strategic tax planning. He has distinguished himself by advising leading corporates, MNCs, contractors, and SMEs across diverse industries, including startups, telecom, manufacturing, and educational institutions. Renowned for his litigation support, expertise in compliance documentation, and innovative solution in technology, Mr. Pani hosts regular speakers at national seminars and forums on indirect taxation. As guest faculty of NASDAQ, he imparts specialized GST training to officers across India, shaping the future of taxation administration with his profound knowledge and professionalism. I present Sri Ashwini Pani.
Thank you. Thank you so much, ma'am. Thank you to all the participants. Thanks to Nasin Vadodara. So I'm just uploading my PPT. Please let me know if it is visible. My audio is clear, participants?
Yes, sir, your audio is completely clear, sir.
Okay, so let me upload PPT. PPT is visible, ma'am?
Yes, sir, your PPT is visible, sir.
Okay, all right. So let me start. So our discussion is on 56 GST Council meeting, which was held on 3rd September at New Delhi. So till now, a few circulars, notifications, as well as FAQ has been issued by CBIC. So let's understand the major changes. We'll not go detail, item-wise details, but yes, where are the major industry sector impacts we'll discuss. We'll discuss the FAQs. We'll discuss how the rate changes are impacted on before supply or before issuing of invoices or before receiving a payment. So the changes on essential items, those are basically almost for common man. The rates has been 0 and few essentials has been categorized as 5%. And standard goods and services items, that those are earlier it was on 28% or more than that, now it is categorized to 18%. Okay, and few luxury or sin items such as high value cars, tobacco items, they are categorized at 40%. So majorly, although we have 7-8 categories, but 12% and 28% has been abolished. But yes, for bricks, special rate 12% is still exist. But most of the items, 12% and 28% has been abolished. So now it has been categorized to 5% and 18%, and few items are 40%. So we all know the rate of few specialized items that I told you for merchant exports, the rate is still 0.125, and for precious gold it is still 3%. So some, for bricks it is still 12%. So specialized items rates are still remain same. Then what is the need of changes? That is only for the common man on citizen-centric evolution that changes is required. It promotes the ease of living and ease of business. It also helps for reforms because the rate rationalization helps nation building and growth of GDP. Here GST registration is also, the process has been simplified, and most of the cases refund process has been simplified. We'll discuss in detail in later slide. And the rate has been effective, decided to be effective from 22nd September 2025. So let's discuss what the important changes in automobile sectors. So in automobile sector, the four-wheelers, those are petrol, LPG and CNG cars up to 1200 cc and 4000 mm. So the rate has been reduced to 18%. Earlier it was 28% plus says, it varies from different rates. And diesel cars up to 1500 cc and 4000 cc, it is reduced from 28% to 18%, and the sales has been abolished at all, except some tobacco product. The sales is still there, and it is also to be abolished till the obligation of loan has been repaid. Petrol cars, those have exceeding 1200 cc, and similarly diesel cars, those have exceeding 1500 cc, and hybrids, they have been increased rates from 28 to 40%. But here there is catch there. Earlier the rate of 40%, and with sales it comes more than 45%, 50%. Now also there is discount of 7 to 10% on these items. So SUVs and those are 1500 cc of more. In that case, on the ground clearance is 170 mm and above, so it is increased to 28% to 40% without any cess. Cars with agent similarly with 1500 cc of more, but not the SUVs, they are also increased from 28% to 40% without cess. Similarly, three-wheelers has been reduced from 28% to 18%. Two-wheelers, they have two categories: up to 350 cc, it is 18%, and more than to 350 cc, it is 40%. Trucks, buses, that has been reduced to 18%, and bicycles, the reduction of rate is 12% to 5%. So these are the rates of individual items. Will not how we have gone through this. But transportation sector, the supply of air transport passengers, that has been changed because 12% has been abolished, so it has changed from 12% to 18%. Okay. Supply of passenger transport by any motor vehicle where fuel cost is included, that is again in the same line of business. So the 12% has been replaced with 18% everywhere you can see. Then supply of transport of goods in containers by rail. Earlier it was 12% with ITC. Now it has two rates: 5% without ITC and 18% with ITC. Supply of natural gas, petroleum crude, motor spirit, high-speed diesel, ATA pipeline. That earlier it was 5% without ITC, and 12% has been replaced with 18%. Supply of transport by goods by GTA. Earlier it was two rates: 5% without ITC and 12% with ITC. Now it is replaced with 5% without ITC. It has also two options: RCM and FCM. They have to declare that, or 18% with ITC. Supply of renting of any motor vehicle designed to carry passengers where the cost of fuel is included in the consideration. Earlier it was 5% with ITC on the same line of business, but here it is again other line of business 12% with ITC. Now it is increased to 18% with ITC. Supply of multi-port transportation. Earlier it was 12% with ITC. Now it has two rates. There is no leg of transportation is through air, then 5%. Otherwise it would be 18% with ITC. Then we have discussed the luxury and sin goods. So the luxury vehicles, aircrafts, yachts, motorcycles more than 350 cc, luxury cars, sin goods, pan masala, tobacco, and unmanufactured carbonate and sugar-based beverages. In that case, the rate is increased, and but here the for BD the rate is reduced from 28% to 18%. So these are the rates on healthcare sectors. Now most of the common rare diseases drugs has been zero, or now they have exempted. There is at all, and some diagnostic kits, glucometer, and other spectacles, medical oxygens, they are reduced from 12% to 5%. Each individual item-wise rate, it is already published in the website and the notification. It can be referred there. And for instruments and apparatus for physical or chemical analysis thermometer, it is reduced from 18 to 5%. Then in insurance sector, there are major changes. It impacts all the common mans for individual health and life insurance policies. Exemption of GST in re-insurance also. Then, but there is one catch: in case of insurance on corporate or group insurance, there is no exemption. But life insurance, which includes term life, ULIP, or endowment policies, health insurance, it includes family total policies as well. and for senior citizen there is exemption of this GST. On the education sector, the erasers it has been reduced to nil from 5%, and other maps, pencil sharpeners, it is also from 12% to 0. Mathematic book, geometry boxes and color boxes has been reduced from 12% to 5%. On food sector, there are major items has been zero, like chena, paneer, whether it is packed and labeled or pizza, roti. Similarly, there confusion about paratha, roti, and it is from 18 to 0%. But condensed milk, butter, ghee, cheese, nuts, mango, citrus fruits, animal fats, it is reduced from 12 to 5%. Mushrooms, drinking water in 20-liter bottles, diabetic foods, fruit juice, that is reduced from 12 to 5%. Then glycosyl, crude, sugar, confectionery, it is reduced from 18 to 5%. Similarly, tableware, kitchenware, household articles, toilet articles, umbrellas, tooth powder, hand wax, utensils, combs, kerosene lamps, sewing machines has been reduced from 12% to 5%. So most of the cases the rates has been reduced. So it is only the helpful to the major sectors. Similarly, on the agriculture sectors, that has been reduced from 18 to 5%, and it is related to most of the tractor parts, tires, hydraulic pumps, bumpers, and for farm machinery, the rate has been reduced from 12 to 5%. Fertilizer sector, similarly, the rate is reduced from 12 to 5. So in this sector, so it is better to discuss on the consumer electronics or air conditioners and dishwashing machines, LCD, LED TVs, monitors, projectors, set-top boxes for TVs, and recording apparatus. In that case, the rate has been rationalized and it is reduced to 18% from 28%. Similarly, on the paper sectors, uncoated papers, paper board used for exercise book, graph book, or notebooks, except textbooks. In that case, it has been reduced to nil. But for the papers used for magazine, it is still an 18%. And for wood pulp, carton boxes, it is reduced to 5%. Uncoated papers, it is for writing, printing, and for composite paper and paper board, it is increased to 12 to 18%. On textile sector, there are major changes on synthetic artificial filament yarns. Earlier it was the threshold limit of 1000. Now the threshold of exceeding 2500, that is rate is reduced from 12 to 5%. So in that case, similarly, waste of man-made fibers, synthetic or artificial filament loss, synthetic or artificial staple fibers, that is reduced from 18 to 5%. So the threshold of textile products, that has been increased to 2500. Similarly, on renewable energy and coal, you can see the most of the cases, solar cooker, solar water, everything related to renewable energy, it is reduced from 12 to 5%. And for coal, earlier the rate was 5% GST plus 400 per ton sales has been changed, 18% GST and sales has been removed. So that is one of the biggest changes. The sales has been removed, the rate is now in consolidated, it has been 18%. Okay. Leather and wood sector rate has been reduced from 12 to 5%. Skin and other parts of bird, leather feathers, that has been rate is reduced from 12 to 5%. And footwear priced up to 2500 per pair is reduced from 12 to 5%, and above it is 18%. Similarly, on wood sector, it has been reduced to 5%. On construction sector, I already told you the only for bricks other than sand lime bricks, it is still on 12% as a specialized rate. Otherwise, the sand lime bricks has been reduced to 5%. And for Portland cement, aluminum cement, slag cement, super sulfate cement, similarly hydraulic cement has been reduced from 28% to 18%. That is major changes in construction sectors. It may be impacted to real estate industries. In service sectors, composite supply of works contract, earlier it was 12% with ITC, now it is 10 to 18% with ITC related to associate services and offshore works contract related to oil and gas exploration and production in offshore areas. Then composite supply works contract involving predominantly earthwork provided pure services, earlier it was 12% with ITC, now increased to 18% with ITC. Then composite supply works contractor provided by subcontractor to the main contractor and related to government, it is increased from 12% to 18%. Handicapped items has been reduced from 12% to 5%, and handmade stalls of sale value exceeding 2500, that is the rate has been rationalized in this case. Job work sector also, supply of services by job work in relation to umbrella, that is reduced from 12% to 5%. Most of the cases the rate is reduced. Only in the last case where the job work is not mentioned in above, in umbrella or printing or bricks or in the pharmaceutical products or skin or leather, then it is increased from 12% to 18%. Hotel industries, we all know the specified premises and the tariff has been removed. Now it is only said if the unit is 7,500 or below, the price would be GST would be 5% and there would be no ITC, and above 7,500 the GST would be 18% with ITC. And in that case, only the hotels with restaurants, they have to pay 18% GST. But hotels must annually declare about their services and classify the premises with the correct rates. Local delivery services like Zomato, Swiggy and everything, that the rate has been rationalized. Now it is 18% with ITC. But there is one catch here. In case of local delivery services provided by the ECO, let's say it is provided by any ECO or Amazon or Swiggy or Zomato, if they are providing these local delivery services, then it is excluded from the scope of GTA services. Only principal to principal will be allowed in this case. Then on the road transport, we have already discussed on this. There is multi-mode transport, only the cash is there. Without air leg it is 5% without ITC, but with air leg then it would be 18%. Footwear sectors, footwear of sale value not exceeding 2,500 per pair, the rate has been reduced from 12% to 5%, and if it is exceeding 2,500 per pair, the rate would be 18%. Similarly, on the defense sector, the rate has been rationalized from 12% to 5%, and for sports good and toys, it is reduced to 12% to 5%. So there are various goods have different rates. We have mostly discussed about this. Now we'll discuss in detail about the registration process has been simplified. It says auto registration will be applied within 3 days, subject to the B2B supply should be less than 2.5 lakhs. That has to be analyzed, and it will be effective from 1st November 25. Then place of supply on omission of subsection 13(8)(b) of IGST Act. The place of supply for intermediary will be based on Rule 13(2) of IGST Act. So we'll have to discuss on this. I'm opening the rule for all of you. Let's see on this. My screen, hope it is visible to you. So earlier the place of supply, we'll discuss on 13. So you can see the 13(8) says the place of supply in the following 3 conditions shall be location of the supplier of services, right? So there is one point is here intermediary services 13(8)(b). So there are a lot of litigations and everything is if the agent is in India and providing services to outside India, then it is taxable. There will be no export benefits or refunds allowed. But now they have rationalized and removed the confusion. They says in this case 13(2) will apply. The place of supply would be location of the recipient of the services. It means whatever the services transaction between the agent and principal, it will be treated as a normal supply, as zero rated supply, and refunds will be applied. So that is a major changes in this case. Now there is another changes on section 15(3)(b). The circular has been issued. We'll discuss it in detail about the post-supply, post-sale discounts. So on the post-sale discounts, let's move on this on the circulars. So we all know on the past, before this circular, it is decided in the clauses where the reduction of rates and supply has been reduced. Then it would be treated as the credit note would be treated as the reduction from the supplies. But now it is clearly there are a lot of debates on this. Now they have clarified this on three situations. It said where the full input tax credit is available to the recipient of the supply when the recipient makes discounted payments to the supplier of goods on account of financial commercial credit note issued by the supplier. It means, let's say A supplies to B and it has issued the commercial credit note as a discount. So what would be the impact? So it has been clarified that section 16(1), because section 16(1) talks about only the credit, whatever transaction or input tax credit, it should be used for furtherance of the business. So in that case, it is clearly clarified that supplier of goods can issue financial or commercial credit notes, and in such cases he will not eligible to reduce, because financial and commercial credit notes has no viability for taking adjustment of output liability, but as per the transaction value is not allowed to reduce on account of issuance of financial and commercial credit note. Accordingly, the tax charge would also got not reduced. So in case any commercial credit note is issued on this case, similarly the recipient is not required to reverse any credit. So it is clearly clarified in point number 3, because the output liability is not reduced. On the second situation, it says whether a post supply discount offered by the manufacturer to a dealer. Let's say Hyundai manufacturer has given some discount to dealer, whether it would be treated as a consideration by the manufacturer for the dealer supply for the same to the end customer as a monetary value of inducement to supply goods and manufactured by him to boost his sales or revenue. If the dealer has given further discount, whether it would be treated as a consideration. So it is clearly defined in section 2 subsection 31 that consideration is to include all the monetary value of any act for the inducement of the supply of goods and services, whether by the recipient or by any other person. So it is clearly mentioned in case of any consideration which is inducement of more sales. So in that case, it will be treated as taxable supply. So it is clearly discussed in case where there is no agreement between the manufacturer and the end customer. There are two independent sale of transaction, because there is no agreement has been happened from manufacturer and the end customer. So one from manufacturer to the dealer and other from dealer to end customer, it is on the separate transactions. So essence of the matter is that contract of sale, the sale is completed on the transfer of title to the goods to the buyer. So once this happens, the buyer becomes, because if we have the transaction has been separately with the dealer, so it will only the buyer becomes the owner once the title has been transferred. So the dealer takes the ownership of goods purchased from the manufacturer and subsequently sells them to the end customer, right? So, and the transaction between the manufacturer to the dealer operate on principal to principal basis, because there is no tri-party agreement between manufacturer, dealer and the end customer. Okay, so these discounts are simply given for competitive pricing to push sales and merely reduce the sale price of the goods. It is not linked to independent activity rendered to the manufacturer, right? Only dealer has to take this for his boosting his sales. Therefore, such discount cannot be included in the consideration. So, in that case, any discount given for such boosting of the sale, it should not be included in the consideration as the monetary value of the inducement of further supply of these goods. So, however, in case where the manufacturer has some agreement with an end customer to supply goods at discounted price, the manufacturer may issue commercial or financial credit note. It means there is another situation where the manufacturer has some agreement with the end customer, and in between dealer is there, because manufacturer cannot sell directly to the end customer. So in that case, manufacturer can issue the financial credit note to the dealer, and again the dealer has to give the discount to the end customer. So in that case, it would be treated as a separate consideration, and that will be included in the overall consideration, and tax has to be paid. And the third situation, just a minute. So again, I am just uploading. Sorry. So it is decided that it will be part of the overall consideration, as it is an inducement towards the supply of goods by the dealer to the end customer, right? Then third consideration, whether post-supply discount extended by the manufacturer to the dealer can be treated as a consideration. It means when the transaction has been happened and the discount has been passed by the manufacturer to the dealer in consideration of the activities performed to promote sale of goods, whether it will be taxable or not. So it is decided that these activity ultimately enhance the sale of goods and the dealers themselves own, thereby increasing their own revenue. In that case, it is clearly mentioned that therefore it is only for reducing their their inducement of their sales. It is offered by the manufacturer to dealers shall not be treated as a consideration for transactions, because the only discount given reduces the to the manufacturer. But another situation where the any dealer undertakes specific sales promotional activities such as advertising campaigns or co-branding, customization services, special sales drive, exhibition arrangement or customer support services, in that case it would be part of consideration and GST would be chargeable. So any doubt on this circular, I can discuss with you. If you have any doubt on this, only you have to understood if there is principal to principal or separate transaction is there between dealer to customer and manufacturer to dealer. There is no such value to be added on this, and they should not reduce the original tax liability in case of any financial or commercial credit note. And similarly, recipient is also not required to reduce the taxes. But in case there is any tri-party agreement is there and the benefits has been passed from manufacturer to the dealer, so in that case it would be part of transaction value and GST has to be levied. And another cases when there is transaction is happening for promotional business and it is only the instruction of manufacturer, then in that case that consideration would be taxable in this case. So those who have understood on this, can you please raise your hands? Those who have understood this circular, because it is very important circular for all of you, that you have to be notices and the scrutiny related to earlier past litigations is also there. So any if you have any questions, please let me know on this circular. I'm waiting for those who have understood. Can you please raise your hand about this circular? Am I audible? Can you please update?
Yes, sir. You are completely audible, sir.
Okay, all right. So hope everyone has understood this circular. I need not to brief. No one has raised any, queries or on these circulars. So let me go next. Is it okay, ma'am? I can switch off my video and go on, because on the presentation it is getting,
Sir, but it's my request if you can start your video like
Okay, all right, okay.
for few interviews.
Okay. For the presentation, then I have to move to the next slide. So here the summary of the case we have discussed. So one is full ITC is available to the recipient when discounts are granted by financial or commercial credit notes. So in that case, no ITC reversal is required when the supplier issues financial credit note. Tax liability and transaction value remains. Okay. Accordingly, tax charge from the recipient would not be required to be reduced. Then tax implication on post-sales discounts offered by manufacturer to the dealer or distributor. There are two scenarios. No agreement between manufacturer and the end customer. So when manufacturer to the dealer and dealer to end customers are independent and separate, so then post-supply discounts operating on principal to principal basis and not linked to any special in this case, not linked to any special services, then that is not to be treated as a separate consideration. And for the dealer supply, the discount merely reduces the purchase price without involving the GST on this dealer. It means if there is no agreement between manufacturer and the end customer, okay. So in that case, that is not to be treated as a separate consideration. And scenario 2, if there is agreement exists between manufacturer and the end customer, so in that case where manufacturer have direct agreement mandating dealers to supply goods to the end customer with some discounts, so such discount may be treated as a consideration for onward supply and attract GST. Okay. Then treatment of promotional schemes. Third, I already told you, in case of any promotional schemes related to advertising, co-branding, exhibitions, or customer support is on the basis of instruction from the manufacturer, then it will be treated as consideration for separate taxable supplies and GST shall be leviable. Okay. Then another circular has been issued by Department of Consumer Affairs related to pharma products. In this case, related to other products. So we'll have to open this circular, but before that I'll tell you. The circular says you can revise the MRP by stamping, putting a sticker, or using online printing. The revised price must be clearly legible and durable. Okay. So because the MRP has to be reduced, the MRP has to be changed. So in that case, the circular says, I can tell you here, the Legal Metrology Department has issued this. So it has given permission to the manufacturer or the packers or importers of pre-packaged commodities. So it is clearly says the original MRP shall continue to be displayed and the revised price shall not overwrite on it. The difference between the retail sale price originally printed on the package and the revised sale price shall not in any case be higher, okay, than the extent of increase of the tax. If any, or in case of imposition of fresh tax, such fresh tax on account of implementation of GST, then in case of reduction of tax, the revised price shall not be higher than the extent of price after reduction of tax. Okay. Then manufacturer, packers or importers shall make at least 2 advertisements in one of the newspaper notices to the dealer and director of legal metrology. Another, it is clarified that any packing material or wrapper which could not be adjusted by the manufacturer because it would be cost to the industry. So it says it in case of any unused materials are laying still that may be used for packing material up to 31st December 25 or till such that the packing material or wrapper is adjusted, whichever is earlier. So that is the circular from the legal metrology department, because you have to, whenever you are going in inspection or search or seizure or any visit to the dealers or taxpayers, that has to be followed on in this case. Then it says, although it is effective dated September 22nd, but validity, the revised MRP can be fixed until December 31st or until the stock is exhausted. Then on the pharma, there is another OM has been issued by National Pharmaceutical Pricing Authority, NPPA. I'll show you the circular here. So I'll discuss only the major part in this case. Although the benefit of reduction of GST rates shall be passed on consumers patients effective from 22nd September, all the manufacturers, is it visible to you or I can increase? All the manufacturers, marketing companies selling drugs shall revise the MRP with effect from 22nd September 25. Then manufacturer or marketing companies shall issue revised price list or supplementary price list as per the form specified here, and the revised MRP immediately. Then manufacturer and marketing companies shall take immediate measures to sensitize dealers, retailers, consumers about the reduction of prices. Okay. It is also clarified that recalling, relabeling or re-stickering on the label of container or pack of stocks released in the market prior to 22nd September is not mandatory. If manufacturer marketing companies are able to ensure price compliance and the retailer label through measures mentioned above, okay, it is not mandatory in this case. However, the manufacturer marketing companies who desire to relabel or re-sticker the stock available in the market may need to be in phased manners, and so that it doesn't cause shortage or drug formulation. Okay, that is only industry related guidelines has been issued by NAPA. So all manufacturers and they have to revise the MRP and they have to do it as per the formula and guidelines. So now the sector FMCG sector MRP revision is allowed on unsold stocks. Relabeling is not mandatory. Deadline, they have deadline by December 31st, and for pharma sectors they have to be revised, and there is no reduction of this adjustment of that, but deadline to revise is immediately, and that the authority is clearly mentioned as per this. Now we have to see the section 14, which is major impact on rate changes. So let's move into the section 14, what it says. Can you please let me know whether you are getting the point, or we are only discussing before going ahead? All the participants, are you getting what we have discussed so far, or any doubt till now? Participants, can you please unmute or chat whether the discussion is fruitful?
All are requested to give their feedback through chat box, or they can raise your hand.
Ma'am, the options and that is there available to the participants now?
Yes. The chat facility is available. If they want to be unmuted at the end of the session, you can unmute them also, no problem.
Okay, Srinivasan sir. Okay, all right. Okay. Okay, no.
If any participant has any doubt, please put up your questions in the chat box. We can get the questions resolved at the end of the session. Or alternately, you can raise your hands also. We'll keep track and we'll let you know at the end of the session. Please.
So one message is from Reggie sir. I don't know. They have mentioned is ITC available for the 5% products, sir. Which are the products you have to specify, because most of the products they are 5% without ITC. You have to specify which product you are referring. Okay. There is one chat I have just replied. I'm just moving ahead. So on the section 14 we'll have to because section 14 has major impact on this. Let's move into section 14. In case of rate change, how it implies, because it cannot be suddenly impact the transactions, so it has some guidelines. So in case of change in rate in taxes in respect of supply of goods and services, so it is mentioned there are two categories. In case of goods and services, are both have been supplied before change of tax. Again I am referring, in case of goods and services, both have been supplied before change of rate of tax. It means supply has been happened before rate of tax. So again there are three parameters where the invoice has been issued and payment has been received after change of rate of tax. Where the invoice has been issued and payment has been received after rate of change of, the time of supply shall be date of receipt of payment or date of issue of invoice, whichever is earlier. So if the date of invoice is pre-change and payment is post-change, then in that case the rate will apply the earlier rate, okay, whichever is earlier. Then another situation where the invoice has been issued prior to the change of tax but payment is received after change of the time of supply, the date of issue of invoice, that we have discussed. But in the scenario one, it says if let's say in some point where the payment has been received before change of rate of tax but the invoice has been issued after change of tax, the time of supply shall be the date of receipt of payment. Where the payment has been received before change of tax and the invoice has been issued after change of tax, then in that case the time of supply shall be the date of receipt of payment. Okay. In case of goods and services, both have been supplied after change of rate of tax. So now one situation we have discussed, goods and services has been supplied before change of rate of tax. Now we have to discuss the goods and services has been supplied after change of rate of tax. Again it has three parameters where the payment is received after change of rate of tax but the invoice has been issued prior to change of rate of tax. The time of supply should be date of receipt of payment. The time of supply would be date of receipt of payment. Okay. Where the invoice has been issued and the payment is received before change of tax, but time of supply shall be date of receipt of payment or date of issue of invoice. I have tabularized on this slide. I'll let you know. Where the invoice has been issued after change of tax but payment is received before change of tax, the time of supply will be date of issue of invoice. So there is three changes and there is proviso that the date of receipt of payment shall be date of credit in the back end code. Okay. So in this scenario I have prepared this. You can see here, if the supply of goods and services before rate change, issuance in invoice is after rate change and payment date is after rate change, so time of supply would be date of payment or date of invoice, whichever is earlier, and that would be rate would be applicable on the new rate. But if the goods supply is before rate change, issuance of invoice is before rate change, but payment has been received after rate change, and time of supply will be date of invoice and applicable rate would be old rate. Similarly, if your supply has been happened before rate change and invoice is issued after rate change, payment before rate change, the time of supply will be date of payment and old rate. So in this case, we have prepared one example here. Let's say date of supply is 15 September, date of invoice is 24 September, date of payment is 29 September, and change is happened from 22nd September. From 12% to 5%, so applicable tax rate would be 12% because here you can see the date of supply is already and date of invoice both are happening, and the date of payment is happening on 29 September, because time of supply has to be taken on 24th September in this case, and example 2 supply is after change, so similarly the time of supply has been changed in different cases. Now the complexity and the challenges is most important here. Notification number 66 and section 14 has a very important role. We'll have to see now notification number 66/2017 here for your better understanding how it impacts this notification. So here it says it is on issued on 15 November. Now it has very relevance on this case. It says the council hereby notifies the registered person who didn't opt for the composition scheme, who shall pay the central tax on outward supplies at the time of supply is on 12/2, and the situation attracting the provision of section 14 shall apply accordingly, and is the detail written. It means those have also registered persons, and they are on 13/2017, and they have to follow on these notifications for this section 14. They have to follow for the rate change also. So those have not opted for composition schemes. So other than composition schemes, they have to follow the rate change. And another important I'll have to show you on the MRP and RSP. We all know for the MRP, most of the cases the MRP has to be changed, and for RSP is for only tobacco product. They have to be identified on this RSP price. So that will be a major hurdles for most of the revenue officers, because it has to be checked whether MRP or RSP is correct. Then compensation cess has been removed, so that is one challenges most of the taxpayers that may apply for compensation cess refunds, but it is not allowed as per the law. So whatever they have compensation cess, they can utilize till 21st September, and beyond that, that will be cost to them. So there is no refund is allowed, because most of the automobile sectors there are huge compensation cess are there, so the refunds application may be filed, that has to be taken care of. Then reversal of ITC, we'll have to check here the section 17(2), 18(4) and 42(43) what it says, because the scenario is that in case of some goods has been exempted from 22nd September, so in that case the pro rata basis reversal would be there. Let's see based on 17(2). So 17(2) is particularly saying the apportionment of credit and block credit, where the goods and services both are used by the registered person partially for taxable supplies, including zero rated supplies, because zero rated supply is also part of taxable supplies, and partially for effecting exempt supplies. Then the amount of credit shall be restricted to the taxable supplies and zero rated supplies. Okay. So the credit of exempt supply will not be available to them. So now on section 18(4) says That is also very important here for all of you. Where any registered person who has availed the input tax credit opts to pay composition scheme, or where the goods and services are both supplied by him become whole exempt, wholly exempt. Now let's say it has rate was earlier 5% for paneer or paratha, now it is going to be wholly exempt. Then he shall pay an amount by way of debit in the ECL. He shall pay an amount by way of debit in the ECL or electronic cash ledger equivalent to the credit of input tax credit or closing stock held at that time, reduced by such percentage as may be prescribed immediately preceding the date of exercising such option. It means if the product has been changed to exempt, he has to reduce his input tax credit laying in his ECL proportionately. This is very, very important for all of you, because he cannot take the benefits of the input tax credit on that exempted goods related to that exempted goods. Similarly, on 42-43 also an important role. I'll tell you the 42-43, because the relevant provision for you for section 65 audit or 66 or any scrutiny assessment work, you can have to follow whether they have reversed the credit or not. So 42 talks about in case of reversal of input or input services. So it says the input tax credit in respect of inputs or input services which is being used for purposes of partially for effecting taxable supplies and effecting for exempt supplies, that should be reversed as per the specified formula. So in case of any common credit is there and that is being used for both the supplies, okay. Let's say they are taking the CA services, or they are taking the any services which is taxable, in that case advertising services, in that case, and both services has been used for exempt and taxable services, they have to be take proportionate credit as per the formula is mentioned here. We will not go detail on this formula. I hope you all are aware about this formula. So only I have to highlight what is the implication on this. Similarly, on 43 also, it talks about capital goods reversal. So in case of any capital goods they have purchased, and they are, let's say they have purchased a machinery, and that machinery is used for manufacturing of exempted goods as well as taxable goods. So whatever credit is available on that purchase of machinery, that should be proportionately reversed on the basis of exempt turnover and taxable turnover. Then post-supply discount 15.3b and section 34 we have discussed, because we have already discussed 15.3. What is 15.3b says? Let's focus on this. The circular we have already discussed on this. So it says value of supply shall not include any discount. Again, 15.3 says the value of supply shall not include any discount which is given after the supply has been effected, if such discount is in terms of now it is removed. There is no such linkages of agreement or relevant invoices. Okay, only the parameters that discussed on this, and on the basis of document issued by the supplier has been reversed. Now the scenario has been changed, and we have discussed on this scenario. Here, in what scenario the reduction will be allowed and what scenario the reduction will not be allowed. Okay. Then circular 135, it talks about accumulation due to rate reduction of ITC. And we all know the IDS, the input distributor scheme, there has been no, whether it would be some accumulation is there, but the circular is clearly said no refund would be allowed But although there is certain high courts and most of the judiciary has given the adverse views, but till now on the jurisdictional stage there is no such mandate. So in case of any accumulation due to rate reduction, so in the IDS options, inverted duty structure schemes, the refund would not be allowed. Then anti-profiteering, although we know as per the notification 19/24, it is on the sunset clause with effect from 1st April 25. So anti-profiteering is not, now effective, although government is trying to monitoring the benefit to be passed to the end customer. Intermediary we have discussed, but one scenario in case of agent location is outside India, so then whether it would be treated as export of services or not, that is very critical point. I don't think it would be considered as a export of services, but still the guidelines has to be come. Then refund on 54(6) has been, they have said the risk-based refund has to be issued, and if within a short timeline the refund has to be issued until unless there is a risk is there. Registration in case of any 4-month liability is less than 2.5 lakhs within 3 days, and whether supplier of e-commerce registration for multiple states, now it is applicable because they have to, they don't need to go each state for to be registered. Now they can get the registration for single states also. Commercial credit notes we have discussed. Withdrawal of circular 212, because earlier the linkage of invoices and agreements is clearly defined in this stage. Now they have clearly said there is no linkages of invoices required as per the earlier circular of 212. Then the requirement for pre-supply agreement linking discounts, that has been removed with this new circular we have discussed. Post-supply discounts can now be passed by credit notes even if not pre-agreed, okay, provided the buyer reverses the corresponding credits, because both way it cannot be happen. So if the buyer has reversed the credit and the conditions are made, then post-supply discount can now be passed by credit notes. Then the earlier circular talks about the CA or CMA certificate to verify ITC reversals. That is now, that is thus condition has been resigned. Hotel industry we have discussed, they have value per unit less than 7,500. The reduction rate is 5% without ITC. Otherwise 18% with ITC. There is one catch here. If they have a restaurant in the hotels, they have only take 18% with ITC, but they have to declare on that. A reversal of ITC rule 4243 and section 18(4) is also making a very important role here. So that has to be understood, because most of the industries, they have the ITC credit is laying. So in this case the reversal of ITC is required in case of some products are making exempted. Then in most of the discussions have related to this GST Council. Some FAQs are there. I'll go to highlight some FAQs. Only the important part FAQs I'll discuss. So it says when the rate change will effective, it says 22nd September, but for specified goods, cigarette, chewing tobacco, jarda and everything, that will be implemented depending on the entire loan and interest liabilities are paid off. Is there any change of threshold registration required for goods? No, there is no change. Then we'll have to discuss section 14 has been discussed so far, so there is no need to discuss again. Another point, what would be the GST rate applicable if I have received advance for supply of goods and services or both, but supply has not been completed or invoice is not issued? The GST rate will be as per the section 14. We have discussed this section 14. What will happen to the ITC for the purchases made before changes in GST rate? And will I get the reduced rate now? To section 16(1), they have referred that every transaction has to be furtherance of the business and subject to the restriction of 49, and it should be credited in the electronic credit ledger. So accordingly, if the registered person receives an inward supply and tax has been charged on it at rate which is consonant with the rate prevailing and time of supply, the said registered person is entitled to credit as per the section 49. Will the impact of IGST rate on import of goods? The IGST rate of imported goods will be the GST rate as notified in the rate notification, except IGST rate has been exempted separately. Okay. So rate notification has to be followed on this. Then another condition there, FAQ, the GST rate has been reduced on my outward supply of goods and services made on or after 22nd September, but I have already have ITC in my GST ledger. And that accrued on account of higher rate. Can I continue? So it says, as per section 49(4), yes, it can be used for any output tax liability. There is nothing to be worried on this. But now the question is, if my outward supply is exempted under new rate, but I have ITC on my ledger, will I not to reverse it? So it says the ITC can be utilized to discharge outward liability for supplies or both made till 21st September. However, for supplies after 22nd September, when the rate is affected, ITC has to be reversed. We have discussed on this point. Then will I allow to take refund due to inverted duty structure? So that is clearly denied on this. So they don't get covered and for the refund in this case. Then another FAQ, if I have already stocked on the date when the rate changes, should I apply the revised rate? So that is already the circular and guidelines are there. I'll only highlight the major impact, okay? Otherwise you can refer these FAQs. That is vehicles we have discussed 40% rate and 18% rate. C-wheelers we have discussed. Ambulances we have discussed. Motorcycle we have discussed. So major textile sector is getting benefited because the yarn rate has been reduced to 5%. So again, the coal we have discussed earlier, it was 5% GST plus compensation cess for 400 per ton. Now it is 18% GST is revised only to consolidate the cess rates. Whether same option here on the transportation we have discussed earlier also on some examples. Whether passenger transportation shall be taxable 18%, no, the passenger transportation will be taxed at merited 5% with no ITC. However, service provider will option whether they can charge 18% or with ITC. Whether the same option 2 rate available for transport passengers by air, no. Such option is available for air. If the travel is economy class, then rate would be 5%, otherwise it would be 18%. Whether 18% is applicable to the transportation of goods by GTA. So in this case, the transportation of goods by GTA will continue to be taxed at 5%, no ITC. However, GTA have the option charging GST 18% with full ITC. You will know because earlier they have to disclose whether they are going from RCM or FCM mode. Then another important we have discussed to the tabular also. What is the GST rate for transportation given multimodal? It means some rail, road or air. Multimodal transportation of goods will be taxed 5%, without ITC, but provided no transportation goods by air is involved. However, where the transportation good by air is involved, the rate would be 18% with ITC. So this is one of the FAQs. We'll discuss another FAQs also on the major part. Otherwise, you can go through each of these. NAPA we have discussed how they can do this for pharmaceuticals. BRICS we have discussed the BRICS rate because it is the special rate for BRICS. It is clearly said under the screen. BRICS would attract 6% without ITC and 12% with ITC with threshold of 20 lakhs instead of 40 lakhs. So there is no change of rate for BRICS, only for sandline BRICS, that is 5%. Insurance we have discussed. So insurance companies, insurance sectors, that is also said, insurers are available in ITC earlier. Now it is going to be exempted. Input tax credit is to be reversed because output tax is exempted. That is applicable in most of the sectors. Hotel industries we have discussed. Suppliers of hotel accommodation services where value of unit or accommodation is less than or equal to 7,500 per unit per day, they have to be charged GST at 5% without ITC. They have option to pay 18% with ITC only where it is exceeds 7,500. Otherwise 5%. Will hotel supplying accommodation that is there. Multimodal we have discussed. So he is giving on the multimodal. It has certain example. You can understand. A engage B through a multimodal transporter for transport of goods from New Delhi to Gaya for 1200 without involving any transportation through the air. There is no air is not there, so 5% would be applicable. But B hires GTSC who charges 18% CCD, D who charges tax at 5%. So GST rate would be applicable for the service provided by B is 5%. And because the rate we have discussed and ITC available to B would be 5% of 600, right? Not 18%. Although he is charging 18%, but IT should be available 5%. Similarly, on the container transporter operator, they have to take the ITC 5% of 400 because you have to, when you are doing the audit, you have to ensure this compliance has made. Then local delivery services provided by the ECO. So services by the local delivery services through ECO where the person supplying services is not liable to be registered separately. So they have to be under this section 9 subsection 5 and liable to pay GST will be on the ECO. Otherwise the rate would be 18%. Another important point is tax treatment of leasing of renting services without operator. Now it is says that without operator the tax would be the same rate applicable on the that goods. So if the tax rate is on the cars is 40%, the tax would be applied, will be taxed at 40%. If it is 5% rate, then the tax would be applied on the 5%. That is FAQ 2. Then FAQ 3. Legal methodology we have discussed now about the revised stickers and the MRPs. on FAQ 4 that they have mentioned about the unsold stocks. We have also discussed how to they have this Department of Manufacturing Protection. The requirement to issue advertisement in two paper has been waived off. Earlier it was there, now they have waived off. There is no requirement of this. Manufacturers, packers, importers now required to send circulars to wholesale dealers about the revised prices. Manufacturer packers shall make immediate measures to sensitize dealers about the rationalization of rates. So these are the major FAQs, and that impacts to the various sectors and industries. Yeah, please let me know if you have any clarification or any doubt. We can discuss it further. Yeah, because now it is your analysis, and the refund application has to be received, reversal, everything you have to be verified thoroughly. Yeah, I am here to take your calls. Please let me know. Now I am giving time to you, and if you have any that the deliberation is satisfactory, please raise your hand and give the feedback to the host Nasin Vadodara.
So, can proceed for 10 to 15 minutes to the lecture. Meanwhile, if anyone wants to raise their hand or want to ask any question to our faculty, they can please through chat box.
Yeah, that's why I'm giving 10 minutes time so that we can discuss it on the major complex issues.
Yes, sir.
So I'll share PPT. Charmi Ajmera ji, I'll share PPT, no worries. But please let me know how the session is today, productive session, or you have gone through some insights or not, whether it would be beneficial.
No participants. Sir, in fact, I have been attending throughout the session, and your session had really been good, very informative, and especially because the effects of the session, effects of the changes that have been brought out by way of GST Council meeting is going to take place from this Monday, which we are happy. It is better that you have explained them in detail. I'm sure the participants have gained the information from you.
Thank you to Charmi Ajmera ji and for this feedback. Other rest of the participants, any doubts or any issues you are currently facing?
I would like to ask Shri Devansha to raise this query to our presenter, Shri Ashwini Kumar Pandey. Sir is asking, sir has a suggestion that refund formula should not be as per ratio of export and import. Refunds should be restricted on export to the amount of tax involved.
So I'm not able to view this chart. Where
I would like to ask, to request Devansha to raise his question to our presenter.
Yeah, please unmute and let me know. Yeah, please. Sahaji, can you please unmute yourself?
he cannot actually, but he can raise his question through chat box.
The chat box it is, ma'am. I'm only received one SMS, then
And type.
and PPT. I'll share PPT. There is one question on PPT.
The GST on the composite.
Yeah. So one question: the GST rate on composite work like building and bungalows under JDA should be rethink and tax assessment in case of due permission to. So the rate of real estate sector only impacted on the rate reduction of cements and certain items, and only the developer has to pass on benefits. But the JDA agreement and the tax assessment, yes, that has to be separately that has to be analyzed, because GST on JDA on whether promoter has to pay reverse charge or whether landowner has to pass on benefits, that has to be clearly identified depending on the transactions. Can taxpayers avail refund of accumulated ITC after rate reduction? So that is clearly mentioned. I have discussed on the circular is there. So accumulated ITC on IDS is not permitted. Clearly there is circular is there. So, but yes, you have to see whether there is any ITCs laying and the services are going to be exempted, whether the reversal has been done or not. And one point, Devangsaji, whenever you are reviewing the refund application, you have to be ensure the reversal of 42 and 43. And because see, you have mentioned the refund formula should not be as per ratio of export and import, because zero rated supplies is not a exempt supplies, but that is clearly there for how you can calculate the proportionately turnover for zero rated supplies are 89.4 and rule section 54. So that has to be clearly taken into consideration while reviewing the refund application. Devan Saji. Place of supply is also a very important part, Devan Saji, for various pharma ingredient other than the pharma products also, because place of supply for section 13 8B has been removed. So that is one part. Second part is that place of supply for normal transaction has to be analyzed. Whether tax has to be discharged proportionately or tax has to be discharged correctly. Let's say agent is in outside India, so then how the refund can be taken, that is another issues on that. So the intermediary services has to be relooked into. Yes. Because most of the pharma companies R&D division are outside India, that is also very valid point from your end. That is a very crucial stage. Most of the sectors may be impacted. Yes. Another you have mentioned about some common government portal in case of bill of entry in customs. So tax collected from the consumer gets deposited in government account. Yes, that is already in the government minds, and they are modifying and developing the custom portals also. On another point, the consumer beneficiary, because the anti-profiteering provision is sunset clause, that is most challenge for the government, how to monitor this. The benefit has to be passed to the end customer. Yeah, anyone else please?
Sir, that's all the queries.
Yeah. So, ma'am, it is that's from my end. You can take it forward, ma'am.
Sorry, sir, you are not audible, sir. Sir?
I am saying yes. I have clarified whatever the queries are there. I'll share PPT. You can share to the participants. That's not an issue.
Yes, sir. Please, sir.
So you can conclude the session right now, ma'am.
So, may we proceed for conclusion, sir?
Yeah, please.
Sir, anyone want to ask any query directly to sir or to host? They can raise their hand or put their question in their chat box. Otherwise, we are going to conclude the session. So the session has been very fruitful and very informative, sir. We are privileged to have you in our platform, sir. Thank you so much, sir.
Thank you, ma'am. Thank you to the participants. Thank you, Nasin Vadodara. Thank you, Srinivasan sir. And thanks to all of you.
Thank you so much, sir.
Thank you. Thank you.
On time.
You are